Welcome to week 36 of my Trading for a Living challenge. And you can see that we smashed the weekly target by $554, so 54% above target. But what's more impressive is that we also smashed the highest monthly total, surpassing month 6 of 4,515 to 4,848. So make sure you like and subscribe. Playlists for all the previous videos are down below. So when we break down week 36, the reason we managed to get to the highest weekly total for month 9 is because it was day 21 till expiration for all my options trades. And basically what that means is I like to manage all my positions around the 21-day mark and roll them out to the next monthly cycle. And the reason why I do that is to reduce risk, pick up bigger credits, as well as widen out some of my positions that are pretty close to the money if needed. So you can see here that it took about an hour to do all the trades, looking at the charts, deciding what my strikes are, all those kind of good stuff. And you can see for the first time in a long time, all the way back to week 23, we're now under 10% from the goal. And as I've mentioned, I don't think I'm gonna beat the target, if I'm really honest with you, but my plan is to be within 10% by the time we get down to the the $53,000 mark, where what a regular 9-to-5 job would be doing that. If we look at the accumulation, we've done just under 1 day or 24 hours, which is near over 1,400 hours better than if we were inside a day job, to earn $3,000 less than what we would during a day job. So I think that is a pretty good return, not only on our capital, but also our time as well. Before we go into trades, if we have a look at how much I'm trading of the accounts, it's about 36%. It's one of the highest. As I've always said, I'll be looking to go to around the 40 to 45% mark at a maximum. So we are well within that particular target. So if we have a look at the trades, as always, what I like to do is put the screenshots in. There's a lot of trades, as you can see in this week's video. So you can pause the video so you can have a look at those if you want to understand buy and sell. But again, as always, I put it in the spreadsheet, which makes it a bit easier to follow. So we're going to look at Tesla. Currently at the moment is trading at 192.53. Again, I am shooting this video in week 37, I believe we are in. Yeah, week 37. So you can kind of see the price movements have happened a bit more than when I did it. So we did 3 main kind of trades here. The first one is our inverted strangle. So we had the 125 call and the 180 put. And what I did, as I've always tried to do with these positions, is roll my tested side, which is my deep in the money call, roll that position up by $5 or $10 every single monthly cycle, and then sell put options and additional options to negate the kind of debit that I took. So if we have a look at this for week 36, is I took a debit of 1,215 to buy this option back, and then I managed to sell the put, which I did at the same strike, for 1,260, which nets me out at a $45 gain. So that's kind of how I manage these kind of positions. And again, I need to kind of get out of these positions, and because these positions are taking a lot of buying power. So my 300 shares at 282.50, 42 grand I've tied up in this trade, and it's only making me $45 a month, which is not a good, efficient return of capital. So then I did some additional rolling of my calls. And again, here, as I mentioned before, I'm trying to de-risk my position. So what we did, we bought back the 230 call and we sold the 240 put for $197 net. And then we also had another call for 2 contracts this time, bought back the 215, sold out the 230 for $660 gain. So again, widening out my strikes, de-risking, and again, picking up credits along the way. So if we have a look at what Tesla's been doing, again, really looking at consolidating inside this kind of range. If I actually get the right tool, it might actually help within this range over here. So you can see we've got our inverted strangle now up to the 130 and the 180 put. And then we've got 2 short calls on there as well, just to bring in additional premium. Still a bit out of the money in terms of strikes. And we've got our 300 shares at 282.50. So that is pretty much my Tesla position. Again, the only adjustments I'll look to make inside month 10 will probably be rolling down these calls or potentially rolling up these puts, depending on where Tesla goes if it breaks out of these ranges. So that's Tesla. The next one is Meta. So, you know, I own 200 shares. It's around the $140 mark when you kind of average these prices out. And you can see very similar to Tesla. Again, I rolled up my deep in the money call and rolled up my puts because Meta just doesn't seem to go down. So if we look at, I took a $1,000 loss. I'm trying to move my strikes up. But overall, again, made a small net credit of $66 while doing this inverted strangle. So if we again have a look at Meta, the Meta is up again, 0.57. Look at this, it just doesn't go down. I don't know what's going on with Meta here, but it just doesn't seem to want to go down whatsoever. So we've got, you know, deep in the money here on my shares. So my shares have actually made quite a bit of money here, but it's this in the money call that is causing me a problem. So what I'm doing, again, similar to Tesla, but fortunately, I'm not too far away from my break-even price. So I'm rolling to the 120, 125, 130, and then 140. That's 1, 2, 3, 4. So that's 4 months, assuming I don't get earlier signs on these shares. That's 4 months that I can roll up this position to eventually get out of this. And again, I'm selling that short call to cover the position. So that's that one. AMC we talked about a couple of weeks ago. I've sold out that position. I don't plan on buying or selling any more options in there. Coinbase is my next tip one, where if I just quickly show you what I've done, again, de-risking. I sold my 8 contract put. I sold it. I bought back the 40, sold the 30 for a net credit of 264. Widened out my call strikes by $30. Picked up $72, and widened out my 110 to 120, bringing in $204. So we net all of that out. That is a 540 gain on Coinbase, and they are all defensive rolls. And again, I'm just de-risking on here, and you can see here, if I had to scroll this all the way down, is really inside this range quite comfortably, you know, the 130, 120, and the 30 put. So I've got options here to bring my calls down for additional premium or bring my puts up for additional premium, which is probably quite safe because it's not even touched 100 for a very long time. So I might do that in this particular week, in week 37, to generate more credits without putting brand new trades on. So that's my approach here for Coinbase, but again, relatively straightforward and relatively simple. We go to Google, I didn't really do anything crazy here. I just bought back the 90 and resold the 90 again and put out the expiration. So if we have a look at Google very quickly, you can see here it is trading near enough this resistance level at around 108. We've got a missed weekly pivot here. I'm probably quite safe to roll this up to the 95, but again, I'm right at the bottom of this range. I don't really plan to do anything. Probably should have opened a bit more contracts, if I'm honest with you, on this particular position. But again, one contract, trading small, trading safe. SCHW, I closed out of this position, so I sold it for 440. I bought the 2 options back for 68. Pretty much a scalp trade to a certain extent when the whole collapse was going there. We talked about it before, all the way down here, still had a lot of room, but I just decided to buy back this option. So, I'm out of this trade now from there. And JP Morgan, again, reducing the strikes, went from the 110 to 105, picked up $24, not a lot of credit on there. I probably could have closed out this trade. I might do if JP Morgan comes out. I might just buy this back if I can, give back $24, take all this risk of JP Morgan off the table. And the last one is IWM, trading at 175, and I'm very comfortable with my strikes that I've got here. It's the only position I did not roll because the volatility was not that great. It's had a pretty poor move right off its pivot level. Again, I keep telling you guys about pivot levels, but I will look to close this thing out. It's sitting in this range very comfortably, so I've got no problems with that. So like I said, I think my view here for week 37 is probably looking at Coinbase and probably looking at some Teslas as well to see if I can do adjustments. So what I like to do during the month is firstly look at what adjustments need to be made to generate some premium. And then if I need to add new positions on, if the opportunity rises, I will. So one of the key learnings from this process is because I'm chasing quote unquote $1,000 a week, I feel like I have to put new positions on. But if there's nothing really to do, if there's a couple adjustments that brings me a few $100s, I should be quite happy with that. So that's one of the things I've learned is try not to go for a target, is just let the market bring you the opportunities when it arises. So, but you know, because this is a challenge, I'm gonna try to get as close as I can to this. Really happy for 2 months of 9, I've managed to exceed the weekly target. I'm now under 9%, using 36% of my capital. But again, most of that is tied up in the stupid Tesla covered call that's gone wrong that I've been managing. So, you know, I can't, if that didn't exist, I would be able to put a lot more trades and make that, you know, 42 grand that I've got stuck in there work a lot harder for me. But unfortunately I can't. So that's why, again, some of the learnings I've done with this process in terms of trying to be a better trader. So again, like, comment, subscribe, do what you need to do. All the other videos are on the screen now of how I trade if you want to learn some more details, and I should see you guys in the next video.